Welcome in. I am the Crypto Bull God, and this is all in the charts. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment, and click that bell icon for all notifications to know when I go live each and every single weekday, guys. Glad to be back with you today. We're going to try to make this an expedited live stream. My week has gotten off to a rocky start. All I can say is I hope your week has started off better than mine. I'll just leave it at that. But happy to be back today. We can kind of assess some of the current price action going on in Bitcoin and emphasize what is realistic in terms of this week's price action. You know, I'm focused on that 2-week chart. We're going to take a look at XRP as well because it is having a nice rise in price today, so we can kind of talk about key price levels there. And then I did want to touch on the total 2. I'll see which total. I basically wanted to take a macro view at the entire market cap of the cryptocurrency space and evaluate what's going on with price action. So with that being said, let's get into things here. So here's your top 10 performers. You can see XRP's having a nice day today. It's up 20, at the moment it's up 25%. Solana's up 2%. Bitcoin is down modestly, and same with Ethereum. So, and again, just to kind of level set, before we get into key price areas to watch for here, one of the things that I was attempting to articulate when I was out here on Monday was that it is unrealistic to expect that we're going to get upwards price action for the next 5 days. Remember, I said, just as a hypothetical, Tuesday we bounce back pretty good. Wednesday we sell off a little, which is actually what's going on. Now, when there is a huge flush in price action like this, and there's a lot of liquidity that comes through, a lot of sell pressure in a day, a couple things you want to watch for. Before that day's candle body closes out, okay, you like to see some strength come in before the end of the day such that you get a wick on that current price day's price action. And then over the next couple of days, you want to see some stability in price and some attempts to push up in price. We don't have to break key areas of price confluence, but you at least want to see that buy-side pressure is coming into the market. So one of the things I would communicate to you that I think is important to note here, if we get away from the 12-hour and just look at the daily for a moment, this is actually what we saw, which was good to see. So as much downside price action that we saw on Monday, it was nice to see some follow through before the end of the day to cause there to be a big wick down here. And you can see the very next day, and I'm sure you noticed in your portfolio, you saw a lot of your projects up substantial amounts. We had a nice green day, and we're sort of attempting to level out in here, right? So let's talk about what we may expect over the handful of couple weeks in terms of price action. So I think the first important thing to note is what we're going to figure out relatively soon. Appreciate engagement's a little low today. Would appreciate the thumbs up. What we're going to figure out here pretty soon is if the bottom is in or if we're going to have one more flush to the downside. If I had to take an educated guess, as I always like to do, I would say the bottom is in. If the bottom is not in, you'll get one final capitulation wick, which will go slightly below here, and we've talked about those price areas before. But for right now, if we look at the 12-hour chart, I've kind of laid out a couple key price areas that you're going to want to watch for here. Ideally, we'd want to stay above 55,100. Okay, that currently is serving as an area of support. This $56,000 to $57,000 area looks like it's going to be a challenge to get back above. Okay, not surprisingly, this was a major area of price confluence back here, so it's going to serve as another major area of price confluence. To the degree that we can push above this region at that 55 to 57 level, it's going to act as support. To the degree that it acts as resistance, it increases the probability that we're going to go lower, right? So if we can't hold 51,100, where would be the next ideal price level to look to hold? Well, beyond any lower price targets that we spoke to on Monday, there is an area right here intersecting these two bodies at 51,300. So that's what I'd want to see hold. If 51,300 doesn't hold, you're going to be looking at the very bottom of this candlestick wick down here at 49,000, 50,000. Okay, those are the key price levels to watch for. So to the degree that we begin to break down, what I'm attempting to explain is to the degree that we begin to break down below 55,100, it's going to open up the doors for an increased likelihood we're going to get to or close to this $51,000 range. Now, I don't want anyone here listening to this content to lose sight or not have the right perspective in terms of what do I want to say? I don't want you to not have a comprehensive understanding in terms of, I can't think of the right words, but essentially the price action I'm speaking to, what I'm trying to get to is the price action I'm speaking to is in the short term, okay? It's on the low time frame charts, right? This is what we're expecting over the next, handful of weeks here, right? Let us not lose perspective, and I've tried to emphasize this point on the high time frames. I had posted out, I was not very active on Twitter today, but I had posted out that I can't tell you with conviction where prices are going to be 6 days from now. I can't do that. But I can tell you with conviction where prices may be 6 months from now. Now, while there is a higher degree of risk associated with projecting outwards, your risk level increases the longer you hold an asset. However, the reason I feel confident making that statement and feeling more convicted in terms of what we can anticipate roughly 6 months from now are based on all those high time frame views, okay? The high time frame views, one of the best ways, I've articulated it so many different ways, but one of the best ways to think about it is in this way. We are in a very volatile industry, okay? And so to the degree that you can make the decision to focus on high time frame views like monthly views, 2-month views, 2-week views, or even a weekly view, you're going to cut out and remove a lot of the noise. And if that isn't really clicking with you for whatever reason, if I went to a 5-minute chart, look at how this looks. Look at how choppy this looks. If I condense that same period of time, now this is approximately 24 hours of price action, okay? If I cut this down to 2 days, that price action was contained half of this candlestick and just this one candlestick. So the whole point I'm trying to make is price action is consolidated on the higher time frames, and so it cuts out a lot of the noise. It cuts out a lot of the volatility. So those are the views to really pay particular attention to, especially when you're getting periods like this. Now, ultimately, what do I think is going to happen here if I believe I shared this with you on Monday. If you go back and you can actually see I was posting things on Twitter as things were unfolding Sunday night, I was getting beer virus vibes, that it felt very eerily similar, not the same, but similar. And I had posted out, something about getting those flash crash vibes, right? So I say that to say, until proven otherwise, I lean in the direction that what we will ultimately see is certainly not something like this. I'm not anticipating this at all for all the reasons we discussed on Monday. But I would anticipate something a little bit more along the lines of this. Now, again, I'm gonna use that expression that gets overused quite often, that history doesn't repeat, but it often likes to rhyme. However, I do feel that is indicative of what we're seeing right now, and that essentially what I'm trying to illustrate here is that I have a belief based on price data where we're at within the cycle and the way the high time frame views look, that we will get some sort of a V-shaped recovery like this. It's not going to look exactly like this. We're not going to take a bars pattern and draw it over there. It's senseless. But essentially, if I had to roughly sketch out to what I'm anticipating in the next couple weeks, if I am correct in what I'm saying and prices have bottomed, maybe we get one more flush down here, we come up, we ride in here, eventually, stabilize in here and then climb way up, back up here. Now, don't look at the time frames, but it's probably going to take us, if I had to again, take an educated guess, it's probably going to take us the remainder of the month of August and the month of September to truly find our bearings before we start pushing up in the fourth quarter. If you actually, and it was one of the things I wanted to look at with you guys this week, so if I have time, we can look at it Thursday or Friday. I wanted to look at seasonality with you, because if you look at seasonality, what you will find is that the fourth quarter of crypto tends to be very bullish in general. So other views, nothing to talk about there. Let's get into XRP. So XRP is having a nice day today. What I would say about it is the comments that I've had before on the chart recently are the same. This is a weekly chart. We've got to get closes that stay above the 200 simple moving average at 60 cents. The push up today is nice, but if it's down 10% tomorrow and static the rest of the week, and we get a close somewhere in here, it's really not a strong move. We need something where you're really going to start to see some strength come into this chart is when you get a weekly close above the 200 simple moving average. Just keep it stupid simple, 60 cents. You want to start seeing weekly closes over 60 cents. This is a chart that has been bleeding heavily against Bitcoin. However, as horrible as this chart looks, this is the XRP BTC ratio. One thing is certain, and that is the certainty is that there's a possibility that this chart has bottomed. I've sort of indicating this rising trend line here, and we've hit right here. This is on the monthly, by the way. So perhaps we have bottomed on this ratio pairing. Now, if we have bottomed, what that would imply is that XRP from current price levels until cyclical top will outperform Bitcoin. So, all right. Let's take a look at total. Let's actually take a look at total other. Now, again, as a recap, and I'm sorry I'm low energy today. I'm really not feeling it today. Between lack of sleep and the way this week has started off, I feel a little mentally defeated this week. Okay, so as you can see, what I did have drawn here, that now the total others, just as a recap, total others, this is the entire cryptocurrency market cap excluding the top 10. Okay, so if we remove the top 10, this is what total others is. Okay, I think that's correct. Yes, that is correct. You can see that I had sort of a falling wedge in here and a bull pennant. We've broken below that, so that pattern is not valid. You might, I don't know how much real value it adds. You might be able to show a broadening wedge here, but I don't think that adds a lot of value. You have descending resistance here. Okay, the black line is indicating there's descending resistance. I mean, really what you want to see from this chart, what is nice, I will say this. What is nice to see, we are holding this zone as support. The only way I would start to get concerned about this chart, if you pulled up a total others chart, if we evaluate this a few weeks from now, and we start breaking below 130 billion, I would be concerned about that, because what you would essentially be doing if that were to happen, and I don't expect that to happen, but if it were to happen, all of this price action would be negated. You'd be all the way back here, which is where you were at in 2023. You don't want to see that happen, okay? So as long as we stay above 130 billion, I'm completely fine with what's going on. Again, speaking to volatility, if you really understand the concept of volatility, you should understand that when we pull up a chart like this, it's going to be a little bit more all over the place than a lot of other charts. Like if we pulled up the total cryptocurrency market cap, which included top 10, Ethereum, Bitcoin, there's a lot more stability within the price action because there's more liquidity. It's a higher market cap, right? So there's going to be more bouncing around on this chart here. So really, it's all about pushing above these red areas of resistance. There really is no magic sauce to it. It's certainly not bullish that we re-enter the Gaussian channel. That's something to watch out for. There's limited price data here. I mean, you can see historically when we've entered the Gaussian channel, it's been devastating, quite frankly. Back here in July of 18, back here in around March of 22. So that is something to watch out for and to keep on our radar. I'm curious if we put this on the 2-week. Yeah, we just flashed green and we've re-entered it. So there was another chart that had a fake out like this where we had just turned green on the Gaussian channel and we started to re-enter it. And I forget which that was. I don't know if that applied to Bitcoin or not. But this is a caution flag. This is a red flag, something to watch out for sure. Let's take a look at let's just take a look at the total cryptocurrency market cap. I don't even know what we're at right now. We're probably at what, like 1.5 trillion, 2 trillion. Yeah, we're at 2 trillion. Okay. 2 trillion. Austin Powers movie is coming back to me. Well, this candle body hasn't closed yet. You could still get a bull pennant out of this. We'll have to see. But we'll have to see how this candlestick closes. This is on the weekly. So, and again, key price structure is holding here, right around 1.8, right? If we were, where would I be concerned on this chart? Where I would be concerned is, first off, if we break 1.8 and we start closing below 1.8 and around this area, because I need this area to hold. You get below 1.6 on the, or 1.55 on the total cryptocurrency market cap, and now you're negating all this price action, right? And we don't want to do that. That was a lot of strong momentum that came up into the market from 23 going into 24. So that's where I would be concerned. But again, we've had some downside price action here. Price is just trying to find its bearings. I need to get on that seasonality view. I remember last year, guys, when I was out here, before I went through my surgery, September might have been the last month that I had, I forget if I live streamed in October. I probably did. I'm pretty sure I did. But I remember, I'm not going to go to it, but I remember the thumbnail I put together with Carnage. I'm pretty sure Carnage was on there from the Spider-Man comics, and I talked about sinister September, right? Because the seasonality data shows that September can be a tricky month. So we'll take a closer look at that. But I'm more interested at this point on focusing on the immediate price action for the month of August. We've spoken in great detail about the 2-month chart, and I want to see how that 2-month chart view looks once August closes out. Guys, reminder, it is August 7th. We have 24 days to go. There is so much that can happen in 24 days. So much that can happen in 24 days. So just hang in there. Again, for a seasoned veteran who's been here for a while, in layman's terms, what the current price action has resulted in my eyes, is solidification that we're not going to have a blow off top until 2025. It's just getting extended out, which is fine. I mean, if this goes much longer than I had anticipated, even the reshuffling in positions that I did do, that I took the opportunity to do, I'll just end up selling those at long-term capital gains. So it's completely fine by me, quite honestly. Yeah, so that's what this correction, for me, the main thing to take away from it is, okay, price needed some time to vomit. We went through an ABC style correction after we topped up here. We just went through a giant ABC. So essentially, this is the A, bottom of the A correction. We rise up here and create a lower high, and then we come down here and puke for the C. The only question is if the C has completed, the C wave has completed. So again, my opinion is it has, regardless, even if we sweep down to 49 or 48 or 47,000. I mean, essentially the low is in my opinion. So all this has done, again, is resulted in me seeking out Peter Schiff in the fourth quarter of this year and sharing the audio interaction that I had with him on his spaces when I said that my view based on historical cyclical data was that we would be much higher in the fourth quarter of this year. So again, this just to me pushes off everything a little bit later. It's just taking longer, like a lot of these moves have. It's kind of funny when you look back, if you've been following this live stream for a while, you remember I had that weekly expectations view put together where I was sort of, when my initial hypothesis was that we were going to top in the first half of 2024, as late as July, no later than July. And all the moves that were occurring in the market for a while were literally following the projection that I had. And I remember coming out here and saying, this looks beautiful. I can't believe this is following it to this degree. It's not the point of it. But I said at some point there's going to be a deviation. At some point we're going to look at this chart and it's going to deviate. There's no way, as much as I come up with an initial hypothesis, something, market's going to throw you for a loop, right? Something else to add there. I heard something recently that made me think that I wanted to share this on the stream. As a market, okay, and the crypto market is a market in of itself, okay? As the market matures, there's more eyes on it. There's more bots and algorithms trading it. There's more institutions involved and big money and whales and all of these things. What happens is the market behavior changes, and that should make sense. When crypto was more in its infancy, and I would argue to some degree it still is in its infancy, but when it was truly in its infancy in 2015 and 2016, it was much easier to manipulate the market and much easier to see prices respond in a way that were a lot more, that's diminishing returns, but a lot more room to the upside. Now that the market has matured a bit and there are more voices and eyes on this thing, what you're going to run into is a couple things beyond diminishing returns. You're going to run into this is a good way to say this. You're going to run into scenarios where the sample sets you're relying on from the past to tell you what you think is going to happen in the future will fail you. Because if you think about it, there isn't anything on any chart that has 100% certainty. It's something that should implicitly be understood in kind of common sense, but something that I try to hit on, right? It's why I tell you, if you're following anyone on YouTube or you're following anyone on X or Twitter, and they're telling you, I know this is going to happen, I feel certain about it, probably best to not follow that person. Because that's a very disingenuous or uneducated opinion. Nobody knows with certainty anything in this market, okay? But what I can tell you with a very high degree of conviction is one of the things I've stressed to you is when we look back on price data on Bitcoin, this is not a lot of price data. And I know this goes back further, actually. This here is not a lot of price data. This goes back to essentially 2000, we'll just say 2011, okay? This is not a lot of price data. Do you want to see what a lot of price data looks like? Let me show you. This is what a lot of price data looks like. This is the Dow Jones Industrial Average, okay? This is on a 2-week chart, and I want you to take note how many years of price data there are. Now remember, Bitcoin was 2011, so we had 13 years of price data. This goes back to the year 1897, okay? So we have nearly, we have over 130 years of price data. Or just about 130 years of price data, okay? So we have essentially 10 times the amount of data. The reason I bring this point up is because what you will find increasingly moving forward, whether it's a pi cycle, we've already seen it with the halving date. We saw an all-time high before the halving, which has never occurred. You're going to see things happen moving forward that did not happen in the past, that go against the probabilities. Because the probabilities that we've come up on regarding what's going to happen in the future is based on what's called a limited sample set. We're making inferences on past data. And when the past data is so limited in nature, there's only so much credibility you can assign to it. There's only so much you can rely on it, right? So the more and more and more data that we accumulate over time, the sample sets are getting larger and larger upon which we can draw our conclusions on. You're not going to have 3 events play out, and then the 4th time it's going to be the same, and the 5th time, and the 6th time. It's why it really plays at the heart of why I develop these impulsive top indicators. There's no one chart to look for, whether it's an MVRV score, okay, market value realized value chart, whether it's a pi cycle top indicator, whether it's RSIs on a monthly chart. There's no one chart, because every chart at some point is going to fail with respect to not following what it has done in the past. Because if you argued, no, as an example, the pi cycle has always worked and it's going to work this time, what you are implicitly stating is certainty. And there are no certainties in this market. So a very fundamental concept I want everyone to walk away with from today's live stream is that the market has matured a lot. And so the price behavior in some respects is going to be more challenging to ascertain what's going on, and things are not going to follow a lot of the past patterns, okay? Again, last time I'll say this. Perfect point. We saw an all-time high before the halving date, which never happened before, okay? So just keep that point in mind. I don't see any comments. I don't see anybody commenting in the comments. So I don't know that there's any questions for me. I know that tomorrow is going to be a little hard to get out here and live stream. If I have time, I will certainly make the time to come out here. I might just, if I come out and live stream tomorrow, I might just make it a TA Q&A day, really not do too much updates in the market. I mean, quite honestly, not expecting too much explosive price action tomorrow. I would suspect prices are going to be a little up or a little down, and there's nothing super exciting that's going to be taking place tomorrow, in which case we can focus on TA Q&A. So I hope to be back tomorrow. I also indicated, by the way, for anyone who is interested, that I am going to have a new backdrop soon. So I did some work on sort of retooling how I want the background to look. I have some new artwork, and I will share that hopefully very shortly. I think that's set to arrive tomorrow. So, all right, everybody. Until next time, let's all spread awareness, and let's carry the education forward. Thank you so much for showing up.